If you are waiting for the media to officially announce the 2026 UK recession, you are already too late. Because the biggest threat to your money right now isn't a dramatic market crash, it's a trap. An invisible economic trap that keeps the country technically moving forward, while quietly draining your bank account every single month. That's why your salary feels smaller, why your mortgage feels heavier, and why your weekly shop is eating up money you used to save. The media is screaming about a recession, but they are completely missing the real story. Unless you understand what is actually happening beneath the headlines, you will keep fighting the wrong battle. Everyone focuses on one number, GDP. Yes, UK economic growth is painfully weak, barely crawling at around 0.9% for 2026. But if the economy is technically still growing, why does almost everyone feel poorer? Because GDP tells you what is happening to the government spreadsheets. It does not tell you what is happening to your wallet. Those are two very different realities. Let's look at what is actually draining your wealth. First, the early 2026 global shocks. When geopolitical conflicts escalated earlier this year, global energy markets panicked. Oil and gas prices spiked, transport became more expensive. Businesses paid more to move goods, and who absorbs that cost? You do. But the hidden punch was what it did to the financial markets. It pushed expected borrowing costs higher, meaning the mortgage relief millions of households were praying for vanished. One global event instantly translating to thousands of pounds of extra pressure on ordinary British families. And then, there's the silent wealth killer nobody is talking about, the extreme summer heat waves. This wasn't just about uncomfortable weather. It was a £2.4 billion hit to UK productivity. Trains cancelled, construction halted, offices losing hours of effective work. It's an invisible loss, but invisible does not mean harmless. It slows down the entire machine that keeps the country wealthy. Look at the real data. Google Trends isn't exploding with people searching for UK GDP growth. People are frantically searching for cost of living, mortgage rates, energy bills. That is what is keeping families awake at night. People are terrified of another 2008, but 2008 was a car crash, fast, violent, and obvious. 2026 is completely different. It's like driving a car with the handbrake firmly pulled up. You are still moving forward, but the engine is screaming, and you are burning through fuel just to survive. Every month feels manageable. Until you look back after 2 years and realize you've gone absolutely nowhere financially. That is the stagnation trap. Now, before we talk about exactly how you can protect your money, if this video is opening your eyes to what's really happening, hit the like button, share this with someone who needs to hear it, and make sure you subscribe to the Wealth Ledger. Every week, we cut through the financial noise to give you the exact strategies you need to build and protect your wealth. The people who build wealth don't wait for the government to fix things, they prepare before everyone else notices. So, how do you actually survive and thrive in this 2026 economy? Number 1. Shield your money from the taxman. In a stagnation trap, every pound matters. You need to ruthlessly maximize your UK ISA allowances. Whether it's a cash ISA locking in the best rates, or a stocks and shares ISA, you must protect your gains from capital gains and dividend taxes. When the economy squeezes you, don't let the taxman squeeze you further. Number 2. Build a fortress emergency fund. A weak economy creates sudden surprises. Companies restructure, jobs get cut, cars break down. Cash buys you time, and time buys you options. Do not rely on credit cards with 25% APRs right now. Number 3. Budget for the worst-case mortgage scenario. Do not assume interest rates will suddenly plummet to zero again. Budget your life as if borrowing stays expensive for the next 3 years. If rates drop, fantastic, you have extra cash. If they don't, you are already bulletproof. Number 4. Keep investing consistently. The biggest mistake people make in a slow economy is hoarding cash under the mattress. Weak economies eventually recover, and stock markets always move before the headlines do. If you try to perfectly time the bottom of the market, you will miss the rebound completely. Here is the ultimate truth. Britain is not falling apart, but we are navigating one of the most frustrating, slow-moving economic periods in modern history. A cocktail of weak growth, high energy costs, expensive borrowing, and reduced productivity. Individually, these issues are annoyances. Together, they quietly drain your wealth. The winners in this 2026 economy will not be the people who panic. They will be the people who recognize the stagnation trap, adapt their strategy, and protect their purchasing power while everyone else is still waiting for the news to tell them what to do. Take control of your finances today. Thanks for watching The Wealth Ledger, and I'll see you in the next video.